Fair point. Apurva Prasad, the Research Analyst from HDFC Securities, is with us. Apurva, good morning. What's the expectation? I mean, Rima's put out the numbers, 25.2% EBIT margin and almost 3% revenue growth. What would you watch out for?
Hi, good morning, Lata. So, yeah, we're almost there on margins too. We expect a similar 90 basis points decline, about 25.3. Revenue is slightly higher. We expect about 3.5% Q-on-Q. I think that's going to be substantial, and that's probably the best dollar terms Q-on-Q in the past 8-9 years now. So I think that's very significant in terms of incremental addition of absolute revenue. If you look for TCS over the next 2 years, that's almost 2x is what they were adding. They were adding about 1.5 billion. Annually, they end up adding about 2.5 billion to the revenue pool annually for the next 2 years each year. So I think they've been winning large deals. Some of the announced deals of $500 million plus TCV multi-year run rate, I think. So how does the TCV track? I think that becomes important. Some of the core verticals, retail CPG, rebounded pretty well the previous quarter. So how do those track? And some of the more exposed verticals to the slowdown, I think some of the commentary and outlook around those areas will be important, as well as we are also looking out for the enterprise budgets for the tech budgets for CY21, and if you can pick up early comments on that, so that will pretty much set the tone. But I mean, the outlook continues to be pretty positive as we look at it.
Apurva, good morning. Now, stocks have had a big rally, right? Infosys in particular, of course, has had the bigger rally, but TCS as well, and now trading at what, 29 times?
Almost.
Yes. Do you still justify it, or you think this is going to be the new normal, or I think most of the good news is now in the price?
Anuj, this is certainly the new normal. I mean, if you're looking on a relative basis, 1-2 standard deviation, but let's not forget the territory that we are in, so we are pretty much growing 2x at what you were growing earlier in terms of incremental, what is added to the base. I think that's substantial, and this is a multi-year type of a growth opportunity. So I think these kind of valuations can stay. We are giving currently about 27 times 1 year forward. I mean, it trades at about 28.5 times, 22 and about 25 times in FY23 numbers. So I think that's absolutely justified considering the longevity of high growth period, the kind of payouts that they have. And the potential, opportunity around cloud transformation with, the overall cloud consumption is going up significantly. So I think these are some of the very strong industry tailwinds that not just provide good support to TCS, but I think the whole IT pack.
Okay, Apurva, we'll leave it at that. Thanks a lot for joining us and giving us your expectations. Meribun, same question to you.